Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So here in the gold market, performance might bring some questions for analysis, just because in general we have the bearish context. And if we take a look at the weekly chart, we have the MACD to the downside, but most important that we have double repo sell in place. And for the double repo pattern, very often, I would say in most cases, once the double repo is becoming confirmed, this close below the 3x3, the moving average forming some kind of the minor top here, and envelops the following performance of the market. Very often after the strong action with the double repo, when the bulls are capitulating, forming a kind of the wash and rinse of the previous top, sharp reversal here. Don't forget that here we have actually reversal week as well. Market takes some pause, and this pause is enveloped by performance of the moving average. That's particular what we see right now. But on the daily chart, some traders could treat this situation as bullish because market stands at the nearest fib support, but it doesn't show any downside breakout. So if you have the bearish context after strong pullback, a strong drop, why just the minor level holds price performance for the second week. So this is the major tricky moment currently on the market. Still, I think that currently we have more bearish points rather than bullish, and from that standpoint, I think that we could try to keep going with our trading plan. Particularly speaking, on the daily chart, by the way, we have the bearish trend as well. So on the full time frame chart, recently we've got really weak numbers on the manufacturing data in the United States and consumption and other stuff, and that has triggered this upward action. As we said recently, that market shows really deep retracements, and that actually takes the shape of kind of the flag pattern. Also, we said that here is rising of the bearish dynamic pressure, so we have downside action while the MACD shows the upward action. And you can see indeed the downward action that we have discussed started pretty nice. So in the weekend we said probably we could try to start with the pullback to some fib levels here for possible taking the short position, and then we will see. Recently you could see that market has actually exceeded major fib levels, reached really deep, has formed really deep retracement due to the release of the data, but and you can see currently we see strong downside performance. This a bit stand in a contradiction with the background that we have on other assets. On the euro currency, overall context remains bullish. On the dollar index, market stands at the edge of the erasing bearish, dollar supportive, let's call it as a dollar supportive pattern. On the 10-year bonds, we see that grabber that has been formed last week, suggesting higher yields, now at the edge of the erasing as well. So all this stuff stands dollar bearish, but you can see that gold shows the opposite direction. So even on the rising, investors actually increasing the sentiment that actually Fed probably should cut rate earlier. This actually explains this upside action, but now you can see what's going on in the gold. And from that standpoint, well, if you're not sure, then better to just stay aside and see what will happen next. If you would like to, then probably you could try to maybe take the short position based on the patterns that we have, particularly speaking double repo, flag consolidation that we have here. So that's the things that we probably could keep an eye on. Also, we could control the possible appearing of the hand shoulders here, or better to say it's failure. So for the bearish setup, we would like to see the failure of this pattern, particularly speaking, drop below the 22 23, 24 area and drop lower back to the lows. In this case, chances on the creating the new bottom or even attempt of the breaking of the flag pattern will become higher. So that's actually what we have currently on gold market. As the bottom line, hopefully this was not too confusing. As a bottom line, we have technically bearish context. If you do not want to sell gold by some fundamental reasons, as we called about this many times already, it would be better to sit on the hands and wait when the retracement down will be over to get a long position at much better prices than the market stands right now. Those who are ready for taking the short positions, currently we have the bearish context, so you could try to follow it. We have double repo sell in place, we have bearish flag, so theoretically you could try to take the short position and make the bet on a possible downside breakout. That's actually what we have currently on the gold.